Hey guys, welcome to Dream Coin, where we share how to invest for a better tomorrow. My name's Tyler, and today we're going to be going over the MRIN stock stuff that has been going on with the huge bullish moves it's been making in the scenario of a potential short squeeze coming into play. And we're going to be looking at some more fundamental analysis and higher upside than I originally priced in them due to new information that I've been digging and connections I've been making with the company. Now, those of you coming onto the video are probably wondering why we're looking at an article about Google and antitrust. And I promise this is going to be connected to Marin Software, but just bear with me for a minute to set this up and give you this connection that I just recently came across. In the off chance that you're not aware of the Google legal issues they've been having, they have over the last few years been facing antitrust legal problems where they are viewed to be basically diverting attention more towards their ad software and technology and placements over major competitors in the space, which obviously this could be a conflict of interest when Google is one of the most mainly used search engines in the world for how to get information. If you're not aware, Google also uses Google ad placements, generally with AdSense, to place different types of advertising on websites. Your more likely scenario, since you're on an investment channel right now, is say you go on a website like Seeking Alpha or something, and you've got one of those down banners that are telling you to go check out TD Ameritrade or the next new algo stock reader or anything like that. Those are going to be ad placements. And what the accusations have been is that Google could possibly be diverting things away from key partnerships or key figures that could be advertising effectively to people in order to favor themselves in a way that restricts access to third-party data and uses data for its own use while advertising and putting out their services. Now, this could become a huge issue because the US government is also already doubling down on big tech companies, specifically like Apple and Google and Facebook and different things that would deal in those. And so if they continued on this route and didn't find a way to adjust, they could be facing a case where the government would possibly want them to disband and split into different companies so that they don't have the ability to monopolize the market. Now, I found this article back from March 3rd, which loosely connects Marin Software, Google, and Kenshu as different things that were dealing in some sort of partnership deal where Google would pay each of these $1 million rebates. And while this has come under backlash with respect to whether this is fair practice or not, or they are still kind of running a monopoly in the market by pertaining with these businesses and possibly arguing that they're influencing them, this actually helps with the innovation of search engine optimization, specifically with Marin Software and what they're doing. And the deal that they have that goes back to payments in 2019, they had Google pay them out $12 million in 2019 and another $9 million in 2020. And basically it specifies that Marin has to reinvest in their technologies and data software and different things that would apply with their business model in order to figure out a way to further innovate search engine technology and platforms in a more efficient way. This deal will be set to expire in September 2021, and we're sitting on July 14th, 2021 at the time of me making this video. Now, if you're somebody that's not very high Marin, or you just dislike the company because it's been on the meme craze lately with short squeezes, you might be, as a bear, using this as an argument to say, well, their partnership's ending. Well, how is this relevant? Why would I want to put any case into this where there's a high chance Google could not put the partnership through? And this is where I come back to the statement where a Google spokesperson specifically gave a statement saying, Marin plays an important part in maintaining a vibrant ad ecosystem, and we're committed to enabling innovation that delivers further choice and value to advertisers. If we just go by this statement, this is very positive for how they view Marin, but you could also be saying, well, this is just being business polite. They don't want to have too much bad blood with somebody they currently have a deal with until after that deal is broken up in case they need to reconfigure terms on that case. To dig deeper into why this is going to be in the best interest of Google to possibly keep this partnership alive and also look for where they could get this into effect of being renewed between now and September, which would give us more press release to look at as a possible catalyst for the stock and more fundamental ground of where I see them as a company. They are under severe scrutiny for this stuff. And what they're facing right now, like I said, is going to be a case where instead of paying fines and possibly having to get split up as a company or face even more sanctions on what they can do as a company. They can look for a company that they've worked with in the past, like Marin, have said positive things about, and innovate the space that they're dealing in to where it's a positive asset to Google as a third-party entity that's with them in a loose kind of partnership. And then the Instacart news furthers that because Marin is also taking a lot of steps to further innovate themselves, which would allow for that to be a good setup as compared to where Google could avoid doing all this themselves and facing further scrutiny and actually just using this partnership they have to do what they want in the digital space. Specifically coming off the Instacart news as well, the Google deal is just an anchor of future expansion for Marin Software and their company. This gives them a bit more of a free flow in some of their cash flow for where they can have a little bit more creative freedom, especially because one of the incentives for Google to pay them with this cash flow is going to be that deal to innovate more of their technology as they look to the future. I just wanted to share some of that information because I found that fascinating and hadn't seen that before and didn't really see anybody else talking about it, whether that's because they expect the deal to end or because they just overlooked that detail. But I think having that connection to Google is pretty huge for the future growth of the company in general. On top of that, we also had some crazy events happening with the Fintel short squeeze screener listing MRIN as the top shorted stock in the stock market right now. This goes off of a squeeze score where their scale is out of 100 and they have a 98.90, and their short interest flow on Fintel is almost 42% of the free float. Their borrow fee is listed at 125%, and they're currently sitting about 75,000 shares available to borrow. As we look here in the 5-minute chart, they did end up being able to retrace back to the support near the end of the day for where we were looking for them to rebound to 14. They did have this jump up here earlier to about 15, which was very nice to see on a broader market day with the Fed talks, which I assumed was going to be a scenario with the Federal Reserve having talks both today and tomorrow in terms of explaining what their direction is going to be on inflation. But overall today, we just had a lot of interesting price action coming through on the stock. As we get the open interest on the options chain for MRIN for different options that expire on July 16th, which would be Friday, we see there is a huge volume in calls coming in versus puts. And this is where a significant amount of this call volume is around that $25 share area. I think the estimate when we calculated it earlier in the Discord was that about 1.25 million shares would be bought on the market to kind of hedge for these call options or if they were exercised. And so this would equate for about 1/4 of these shorts that are currently shorted, leading to just a stupid upside scenario if this actually gets squeezing and shorts still haven't covered as much and they start feeling the heat to cover. We did also see some very weird price action on the level 2 data, where at one point going towards the end of the day after lunch, we saw a flash of what looked like one buyer or one entity just putting down 200,000 shares as a buy around 14. And this is around when the price was drifting down to that area. And it looked kind of just like somebody almost taunting in a way. Like, it's weird because we're talking about the stock market and different things going on, but we are in the age of meme squeezes. And I think that would be something that would go with the case where it seems like there have been bulls that have been pumping this stock, spiked in specific areas to not only keep it off of certain price points, but also to trigger different things going on. It seemed like there was a coordinated attempt to get this to hit SSR today, which it did hit. And then as soon as it hit SSR, and it was only 2 cents underneath, just not long after, it had that huge run up to 15, like where it was just screaming going up. And so we've got SSR going into tomorrow, which is Thursday as well, which sets to where shorts can't add new positions unless it's on an uptrend between now and Friday. But that 200,000 share buy that kind of flashed on either was just a weird glitch where they meant to kind of just iceberg it, where if you have large block sales you can kind of hide it underneath the level 2 data, or if that wasn't a glitch or just somebody forgetting. That looked like somebody was basically saying, yo, you're not getting it past this price unless we want you to. And it was just really weird to see. It was only on the data for about like 10 to 15 seconds before they pulled it off. And so I don't know if it was like a flex or if it was was a just mess up, but it seemed really weird to happen around the price area that it did. And on top of that, it seemed like there was almost just an attempt to put a little more fear into shorts, looking towards where we could see the squeeze. Going into the market day tomorrow, July 15th, I do see a very bottom support sitting here still around $12. If you want to go a little bit lower, it could be around $11.70, but it seems like the dollar points have been very significant to whoever has been wanting this to support there. So I would see it more as about 12 right now, unless it has significant downside. I think if we can stay drifting around this 14 area and go into market open where it's just kind of sitting, and especially if they can get a nice pre-market run to where they open really high, it's going to be very hard for shorts to pull this down. So if we can open between like 16 and 19, and any downside from there would be unshortable unless it's on an uptrend, that would put shorts in a dangerous spot where if they want to spike this higher going into the market day as bulls, this could be very dangerous going into Friday with all those call options coming in, especially if they keep like the 15 and 1750 options on this in play. And then that would kind of escalate a domino effect where you'd go the 15 options are exercised and the 1750 and then the 20, and then it just keeps going and going and going. And that's before even counting in any of the shorts covering. So that's going to be the severe bull case. That's going to be my current downside on this. And I think we're going to be seeing a very interesting next couple of days. The broader market is supposed to be red for another Fed talk tomorrow, but depending on the strength of the stock, especially with what seems to be very coordinated in how the price movement has been, I wouldn't be surprised if whoever is touching this would try to make it run in pre-market and have it open pretty high, so it's harder for shorts to pull it down. My new long target based on fundamentals, after I kind of dove more into this Google partnership and what looks to be a sustaining kind of long time flow going between these two companies, I think they have a very good chance to have a $60 per share target in the long-term future. And this would put them at a market cap of roughly $750 million, which I originally priced them around $500 million after the Instacart news. But obviously with the anticipation of this getting renewed most likely, and then the fact that this looks like a strong anchor for where they can go into the future and look at new options for customers, this looks like a set for where they could very successfully hit a $750 million to $1 billion market cap in the long term, especially as a digital platform company. It's been a pleasure covering the MRIN stuff for you guys as of late. I know a lot of people were panicking pretty hard on Tuesday when the price was down a significant amount, and then I just told everybody to just kind of relax. It still hadn't hit my $12 support really, and it kind of held, and a lot of people ended up seeing what kind of stuff was going on today with the weird fluctuations in the price and that buy listing that we saw on the level 2. And with the jumps in price here, I think this is far from over as of right now. That's going to do it for me in this video today, guys, and I'll catch you in the next one. Peace.